one, and today we are talking about how to improve your trading results with the right trading psychology. I'm sure that you probably have heard about this a lot of time. You've heard about trading psychology. A lot of people even prove that 80% of trading, 80% of your success in trading has to do with your psychology. So you probably are wondering, what is psychology of trading about and how does it affect my results? So that's what we're going to be talking about here today. Okay, so basically psychology has to do with your emotions, your feelings, the mindset that you have while you're trading. And this can either have positive effect or negative effect on your trades and consequently your trading results. So that is why it is very important. And for me, what I have come to see is that it goes beyond just trading. In everything we do in our life, whatever business endeavor it is, whatever other endeavor, it starts with our mindset. All right, our mindset at the time we are trying to do something or achieve something matters a lot. It has effect on what the result is likely going to be, and these have great effects on the market because we are dealing with money directly here. Like what you're trading is money, the commodity you're selling is money. So that's why you see that our name is Money Sellers. You see the name of my group, Money Sellers Africa. So what we trade is money itself. So, and money has a lot of effect on human. Most of the things we do reflect around money. You need money to live. You need money to live, to have shelter, to do everything. So money, a lot of things revolve around money in our life. So because of that, our attention, our emotion is heightened or kind of affected when we are trading. Because now you're trading directly, you either make money or lose. Yes, the same way if you are doing normal business, traditional business, it's going to affect your emotion. But this one, because you are trading now, you're looking at your money, it's either going up or down. It's either you're losing it or you're making more money. So because of that, your emotion is really at play when you're trading in the market. So because of this, you want to really understand what does it have to do with, what can you do to adopt the right emotion when you're trading, and how can that have effects on you in the market as an individual. So it's very important, and that's why we're here today. So there are certain emotions that are negative emotion that comes to play when you're trading the market, because like I said, we are trading money, and a lot of emotion comes into play when you're dealing directly with money. And one of this is fear of loss. All right, fear of loss is what affects us in many areas of our life, not just when you're trading. Naturally, it's like an inborn thing that you fear losses. You want to win. Most of us desire to win in whatever we're doing in life. So when you begin to notice a pattern, like it looks like, oh, this thing is looking like that time I made a loss, this was how it was going. There's this kind of fear that comes into play, and you need to learn to deal with this fear so that it doesn't crowd your judgment and affect you when you want to make trade decisions. So fear of failure or fear generally is one thing that is likely going to affect you in the market, and you need to learn how to deal with. So how do you deal with it? We're going to talk about how to deal with these emotions, but I'm going to talk about, I'm going to start by talking about these emotions, and then we'll talk about how to deal with them in the market. Okay, so another one is greed. Now, for greed, you probably will say, I'm a Christian, I'm a Muslim, I'm a religious person. How will I be greedy? I'm not greedy. I'm not a greedy person. It's not possible. But like I said about fear, like fear is an inborn thing. We have fear. We have some things we are afraid of in life. Okay, we fear losses. The same way, greed can also come into play at any time. You are dealing directly with the market. You can sit in the comfort of your home and make decisions. Nobody's looking at you. Nobody is ready to hold your hand. So a lot of this emotion at play can make you look at it like, maybe. And one of the things the market usually does is, especially for new traders, you go into the market, you're just trading anyhow, you really don't know what you're doing. And all of a sudden, the market begins to go your way. You're doing a buy, and you see, the market going your way, and you are seeing blue result, you're seeing money. And so it looks like, oh, so it's this easy. And that greed comes to play, and you're like, if I can make $5 per trade this way, how about if I increase the lot sizes and I begin to make $50 instead of $5? Remember, you're trading on your own. Nobody's there to hold your hand. Nobody's there to tell you, oh, what you're doing now is wrong, or, oh, no, don't do it that way. Yes, you probably have taken training. You've been taught all of this. You know them. You know the rules of trading. But now that greed comes into play, and because you feel, well, if it can go my way this last 30 minutes, then it is likely going to continue my way. Let me quickly add more trades and go in. And then the market can begin to go against you at that point in time. The market doesn't know you, but at the point you come in, unfortunately, it's possible that the market at that point is when it just got to equilibrium and it is ready. Even if you are on the right direction, the market is trending up, you're buying. But all of a sudden, no matter how much the market trends up, it gets to a point of equilibrium and some of the profit will be shed off. Even if it's going to later continue that direction, it will get to a point, because the market moves in waves. It goes up and then it retraces. It goes up again, it retraces. So it could be at the point the market is about to retrace that you are just jumping in with more trades, because now that greed has come to play and you feel, if in the last couple of minutes or hours I have been making profit, then what stops me from adding more trades now and making more profit? And so instead of making more profit, what happens? The market turns against you. And another emotion that can also come into play is overconfidence. So like I said about greed, you come into the market, you are new, and all of a sudden the market, the prices begin to go your way, and you're like, wow, so I can make money like this. And then you're putting more trades, adding more trades, because you feel, well, I took the last trade. At this point, when overconfidence begins to come in, even if you have your mentor warning you that, maybe you share your trades. I remember I used to have this particular student who, after some weeks of training, started trading, and then he shared his result. And I was like, wow, this is interesting, but there's a but. But these trades you're sharing, you are risking too much, all right? You are going against the rules of trade. This lot sizes you're using are too big. This number of multiple trades you have taken, they are too much. You need to, pause it and, go back to what you've learned and understand how you're supposed to be taking this trade. Unfortunately, he wouldn't listen, because the trader, I'm telling him, are positive trade for him. They are making profits. So we look at it that, what is she telling me? Yes, even if I'm not following rules, and I'm making profit, what's important is the money. What's important is the profit that I am making. So what do I do now? I should stop trading this way and stop making the money I'm making already. And so we continue trading that way. But what happens in the long run? It lost that money. It blew that account. So overconfidence is another emotion that can come into play, and also on that trading psychology that you need to work on. Okay, so I have talked about greed, I've talked about fear of loss, I've talked about overconfidence. Another one is hope. When you're so hopeful, you just want to make it now, and you've taken a training package, you've learned how to trade, your mentor knows how to trade well, your mentor is well known, your mentor is doing very well. So you feel that if my mentor can be making good results, so what's the big deal? I also should be able to make some good profits. I should be able to trade like her if I am taking training from her. So you jump into the market and you're trying to trade too, and so you are so hopeful. You say, okay, if I take this trade, if this one can get into profit, then I'll make some $200 profit today, or I'll make $1,000 profit this week, and so this is what I will do with it. Yes, it's a good thing to have, like plan or goals that you want to achieve every week. However, when you're too hopeful and that is just what you want and that's what you're expecting. If the market goes against you, it may affect you negatively, and then it can lead to the other emotion, which has to do with fear. Now you're afraid, you don't want to take any more trade because the last one where you were so hopeful, you lost the trade. Okay, so these are areas where your emotion come into play. Now you may be wondering, these are emotions that are normal. How should they be affecting my trade? If you listen very carefully to me, I have talked about how they will likely affect your trade, because now you're becoming overconfident and then you're taking more trade than you should. You find yourself going against the rules, the rules you're supposed to follow as a trader, you're not following them. And so instead of making money, you are now losing money. I'm sorry about that. I didn't record this. So instead of making, you're now losing money. Okay, so it is very important that you focus on these emotions and you do right by yourself. Very important. Okay, so now how do you manage this emotion? How do you manage them? One thing that can help you to manage them is to be a very disciplined individual. Yes, it is very hard for us to maintain discipline, but you need to, for you to be able to get to that level of discipline, you need to have rules. Have your rules. That's why if you see me talking about how to hack the secret to profit in currency trading, I usually start with your trading plan. Having a plan, written out, to help to guide you on how to trade the market. Having your rules written written somewhere as your plan to trading the market will help you, because now you have a plan you're following, you have rules you are following. You're not just jumping into the market and trading any way you see the market. You have rules, and if those rules are not met, you are not going to trade that way. So when you have this, to a large extent, it's going to help your emotion, because you are trading based on rules. You're not just coming to trade based on your emotion at that time, all right? So it is very important. Now, it is usually difficult to follow rules, very difficult to be disciplined. So you have to work on yourself. And what I have come to see is, if I've come to learn from my own experience, is that if you continue to follow, your rule, you do it consecutively, even though it is hard, even you don't have to go through a lot of pains to follow this rule. If you continue to do it for a number of days, weeks, or months, it will get to a point that you get used to them and they will become the normal. They become normal to you. So very important that you have your rules written out, because that's what will help you to follow the rules. If you can read before you take your trade, you go through your rules, you have it in your mind, and then it will be a bit easier for you to follow those rules. So that's one thing that is very important. Another thing is that you should, sometimes when you have taken a trade, take a walk. Rather than sit in front of your computer and you want to see what the result is going to be now, you're looking at the market tick by tick, tick by tick. And so, like I said earlier, the market moves in waves. And so when the market is going on retracement, or is reversing or something, or just correcting, you are afraid that, oh, I'm losing money. And so you are either jumping out or you're panicking already. Okay, but if at that period, you've stepped out of your system, you're not in front of your system, you're not watching the market tick by tick, you're out of the trade totally, it is going to help you. If it's going to hit your stop loss, let it hit it. If it is going to correct for some times and then continue your way later, let it be. And so that way you don't allow your emotion to move you into touching the trade or changing maybe changing your stop loss or moving your take profit from where you have the target set before. Okay, so that's another very important thing. You take your leave after you have taken the trade instead of watching it tick by tick. Okay, another thing that can help you in this regard is that you should be a continuous student. Okay, be a student always. What that means is that you want to keep developing yourself. Keep reading. There are books on trading psychology that you can read. I remember one of the very first book I read on trading psychology is The Disciplined Trader, I think by Douglas. Yes, something Douglas. The Disciplined Trader. And then I read Trading in the Zone These are very important trading psychology book. And another one you can read is my book, because it covers not just, this is it, Ultimate Forex Trading Blueprint. This covers not just trading psychology anyways, but it covers everything, all the essential fundamentals of trading, the essential pillars of success in trading, your trading plan, there is trading plan templates, everything you need to know about trading plan, a template that can guide you to building yours. And then trading psychology is there, strategies are there, risk management, money management, it covers everything. So if you are looking at not just reading about trading psychology, you want to learn it all, it's a very good coverage. It covers a whole lot. What you need to go straight to the point and teaches you what you need to know about trading psychology. So this is a good book for you to read. If you've not got your copy, you need to get your own copy. It will help you a lot in your trading psychology, improving your trading psychology. You will know how to handle these emotions when you're trading and how they will guide you in trading, right? So like I have said, you want to take your leave. You don't want to be in the market, watching the market tick by tick as it is moving up and down, whether it is going your way or not. Another thing is you don't want to be focusing on just the profits you're going to make. You don't want to be opening your trade and be looking at how much have I made, how much have I lost. And that's also boils down to the fact that you should take your leave, because if you take your leave, you won't be doing this. But even if you take your leave from the charts, but you go to where the profit session and losses are, you're looking at how much have I made, how much have I lost. Your focus is on the profits now, and that is going to affect your emotion. But if your focus is on improving, you want to improve yourself and be a good trader, a professional trader, you will look at, am I following the process? Am I following the rules? My rules that I've written that I want to follow today, am I following them? Am I trading the right lots? Am I following my risk management rule, my money management and all of that? These are the things you will focus on rather than focusing on just the profit, okay? So it's very important. Another thing you want to do is your imagination. You want to imagine winning. How are you going to feel if you are winning? Okay. You also want to imagine losing. So your emotion should not be based on win alone. If you lose, how are you going to handle it? If this trade, be prepared that this trade I want to take can either go my way or it can go against me. If I make losses, how am I going to feel? If I win in this trade, how am I going to feel? It is very important that you don't over rejoice when you make wins, such that you now become overconfident. You also don't get overpaid when you make losses, because it is a normal thing in the market. One other thing that will help you is understanding that the market is more like a probability. You cannot control the direction of the market. And so because you can't control the direction of the market, what do you want to do? You want to focus on doing trading right and focus on managing your risk, because the market will sometimes go against you. You can't control that. The market will sometimes go against you. So since you know that the market will sometimes go against you, you be ready, be prepared for it. If it goes against me, if it doesn't go against me, what am I going to do? How am I going to handle it? Risk management and money management comes in here. So every aspect of trading, they join. Psychology of trading is very wide. Trading itself is wide, but as you learn from people who already trade like me, you come on here, as I share regularly like this, you read more about it, you take courses. It is very important that you take up a training package. Don't jump into the market with this mindset of, what's the big deal? The money I need now is the money to trade with. How will I pay someone to teach me? I can easily learn it myself. This is the major root of losing money in the market. If you have $1,000 to trade and you cannot sacrifice $100 out of it to learn first, then you're about to make a major mistake, because you are going to be making a lot of losses in the market. Yes, it is possible for you to be self-taught, but it's going to take longer time, and it's also going to take a lot of wit determination on your part to really learn to do it right, because people who have learned from their own experience will help you to take a shorter route to consistent profits in trading than you starting to find it on your own, trying to find your path. You can eventually find your path, but it will take longer period, longer time than when you get a mentor, someone who has done it, has been there and is doing well for themselves. So this is why I encourage you to look here. Let's hold you by the hand and walk with you every step of the way. I have an academy, MS Africa Academy. All right. So I'm the founder at MS Africa Academy. If you want to do well with yourself in training, we have our training packages cover from basic through intermediate and advanced level. So it's something you really want to do for yourself. Very important that you take that up for yourself. Take up one of our training packages. Even if you trade already and you feel that you have strategies that are doing well for you, we have risk and money management courses that you can take and improve yourself on trading. We also have individual trading strategies that you can take. The book is here. If you've not got yourself a copy, no matter what level you are in trading, whether you're entirely new to the market, Ultimate Forex Trading Blueprint. Okay, it's hardcover. This is the jacket and this is the cover. You see, very strong, and that is because this is a trading manual. It covers basic through advanced level of trading, everything you need to learn to do trading right. And so because it's a manual, you have to keep going back. That's why I decided this should be in hardcover, so that yes, it can be of good use to you. And if you prefer the e-copy, it's also available for you, and you can get the e-copy as well. All right, so that's basically what I am able to cover today on that trading psychology, and I hope that you've learned a lot. So I look forward to having you be a part of our academy. We're starting new classes